Hello students, in today's video we are going to start our discussion on the first module, that is amalgamation, absorption and external reconstruction merger method. So let's start. Now we all know that growth is essential for survival and existence of a business or industry. This growth is measured in terms of sales, profits, and assets that are acquired by the firm. So, the companies that are planning to expand their business have to make a choice between internal growth or external growth. Now, what is this internal and external growth? Let us first understand that. Internal growth. Now, internal growth happens when a firm expands its business activity in the same product or different lines of product. For example, if a company is into manufacturing of wooden furniture, now this company might plan to manufacture plastic furniture because there is increase in the demand for plastic furniture. Okay, so like this the company can have internal growth. It can either expand its existing business or it can enter into new line of business to expand. Another option for the company is external growth. Now, external growth happens when two or more companies combine and then expand their business activities. This is actually the fastest method of growth because when there is combination of firms, it helps to maximize the profit as well as to eliminate the existing competition. So, in this module, we are basically going to study the external growth in detail. So, let us see how a company can have external growth. First is merger method. When an existing company is taken over or purchased by another existing company for an agreed price, it is called as merger or absorption. Now, let me tell you, merger simply means when a company is acquired by some another company and the company which is acquired loses its existence and the acquiring company gets the ownership of this company, then it is called as merger. So here basically what is happening, two companies are becoming one company and the company which is purchased will lose its existence and only one company will be continuing the business. For example, merger of banks. The first one you can see, Indian Bank is merged with Allahabad Bank. So Allahabad Bank has lost its existence and Indian Bank is into existence. Then Punjab National Bank, Oriental Bank of Commerce have been merged together. Another example is merger of Canara Bank and Syndicate Bank. Again, Union Bank is merged with Andhra Bank and Corporation Bank. So here in the last example, Andhra Bank and Corp Bank have lost their existence and Union Bank has merged these banks into itself. So now Union Bank is into existence and other banks have lost their existence. So this is called as merger. When the companies are coming together, the companies who have come together lose their existence and one company continues the business of the same, then it is called as merger. Next is amalgamation. Amalgamation is the consolidation or combination of two or more companies known as the amalgamating companies. Usually the companies that operate in the same or similar line of business come together and form completely new company. So in case of amalgamation, what happens is two companies which are doing same business, they come together and start a new company. So both these existing companies closed down their business and now they start a new company. Then it is called as amalgamation. For example, now you can see company Y is an old company and company Z is also an old company. Now these two companies are closing down their business and starting a new company, that is YZ company. So both the companies are losing their existence and starting a new company. Another example, you can see Idea and Vodafone. Both together have amalgamated and started company V. So this is the perfect example for amalgamation. I hope you are understanding the difference between merger and amalgamation. Let me make it more clear for you. In case of merger, what is happening is one existing company is taking over the business of another existing company or companies. I gave you example of banks. Okay, but in case of amalgamation, what is happening? A new company is formed which is taking over the business of existing company. So basically in merger, no new company is formed, but in case of amalgamation, a new company is formed. So you have to remember these differences so that this concept is clear for you. I hope the meaning of merger and amalgamation are now clear. I would request the students to keep in mind the example to understand this concepts. Next you have is acquisition. An acquisition is when one company purchases most or all of another company's shares to gain control of that company. Now acquisition is completely different. In case of acquisition, what happens is one company purchases most or all the shares of another company to gain control of that. So basically one company is acquired by another company. Example for acquisition is Facebook acquiring WhatsApp. Now WhatsApp was being owned by somebody else and Facebook was being owned by somebody else. So what Facebook did is it took maximum shares of WhatsApp in order to have control over WhatsApp. So this is acquisition. So all these three terms are having different meaning. Merger is different, amalgamation is different, and acquisition is different. If you remember the examples, all these concepts will be clear. With this, I conclude for today. Thank you.